Today, the stock I'm watching is General Dynamics. It's a ticker GD. General Dynamics is a large conglomerate, a defense contractor. Basically, it has four divisions: aerospace, which is Gulfstream and jet aviation; marine systems, which is Bath Iron Works, Electric Boat, NASSCO; combat systems, European land systems; ordnance and tactical systems; and technologies, which is information technologies and mission systems. They've been around a long time. I actually worked for them as an engineer back in the 1980s in San Diego, so I'm pretty well familiar with the company. When you talk about General Dynamics, it operates, again, as an aerospace and defense company worldwide. It operates through those four segments: aerospace, marine systems, combat systems, and technologies. So founded in 1899 and is headquartered in Reston, Virginia, so it's been around for a long time and employs more than 100,000 people worldwide. If we look at the 2020 revenue for fiscal 2020, it was $37.9 billion, and the cash from operating activities was $3.9 billion, or 122% of net earnings. Earnings estimates, according to Seeking Alpha, for 2021 is $30.2 billion, with earnings per share estimated at $11.53, all the way to 2023, which is $42.68 billion, and EPS estimates of $13.66 per share. When you look at earnings revisions at Seeking Alpha, you have 15 analysts with upgrades and none with a downgrade. Dividend yield is 2.39%. Annual payout is $4.76 per share. The market cap's $55.62 billion, with an enterprise value of $68.31 billion. If you were to take the way I calculated and just break this company up and sell it, each shareholder would make about $152.82 per share. Shares outstanding are 270 million shares, and the company is currently buying back stock. Ownership institutions are over 80%. Short interest is less than 1%, and over the last 52 weeks, the stock has gained 32.3%. So it's about even with the S&P. So it has a lot of things that I like. Number one, it's a stable company. Number two, it's constantly growing revenue. Number three, it's buying back its shares, which is helping me as a shareholder retain value, and it's also giving a dividend. So those hit all three, and the stock shares have gone up 30% over the last year. So if we look at the second quarter earnings for the 3 months ending Q2 21 versus Q2 20, the revenue in 21 was $9.2 billion, just a little bit shy of what we had in Q2 20. With the operating earnings, we're up to $959 million from $834 million. So their earnings are going up. Their margins have gone up from 10.4% from 9%. Net earnings have gone up. Diluted EPS went up to $2.61. Cash from operations, you can see, is way up. Free cash flow of $943 million. The earnings per share grew 20% on a 15% increase in operating earnings. The free cash flow reflects strong operating performance. And the EPS guidance from the company was initially 11 to 11.05 per share, and they updated that to 11.50 for 2021. Company I like, it meets a lot of the check marks that I look at in the company: established, growing revenues, growing earnings. Our operations from cash from operations are not out selling more shares. They're not making more offerings. They're not diluting shareholder. And I think it's a good long-term play. And that's why I'm in General Dynamics.
The stock that I'm interested in is Schrödinger. The ticker symbol is SDGR. So Schrödinger is again another pharmaceutical company that is combining artificial intelligence for drug discovery, like Abscelera, the stock I've mentioned before. Schrödinger provides a physics-based software platform that enables discovery of novel molecules for drug development and materials application. Now, the company operates through two segments. One is the actual software, where they focus on selling their software to biopharmaceutical companies, academic institutions, and government laboratories worldwide for drug discovery. And the second segment is the actual drug discovery itself for Schrödinger, where they focus on building their own portfolio of preclinical and clinical programs internally and through collaborations. Based on the NIH, the National Institutes of Health, the average length of time from target discovery to approval of a new drug is about 14 years. Now, the failure rate during this process exceeds 95%, and the cost per successful drug can be $1 billion and more. Now, by combining artificial intelligence, this failure rate is not going to be fixed, but it's actually going to replace the scientists, reducing the time and money dramatically. Now, if you think about the drug discovery industry since the 70s or 80s, scientists have basically conducted experiments on petri dishes using kits and pipettes, trying various attempts to interact molecule A, B, and C, and D in order to find the best combination to treat patients in various therapeutic areas. Now, this process is usually thought to take around 4 to 6 years which also costs a lot of money. So, what Schrödinger has done is basically create a search engine of molecules that operate in artificial intelligence and machine learning that will bring the search process for a pharmaceutical drug discovery down from 4 to 6 years to 2 to 3 years based on their company presentation. So, again, they have two major segments where the first segment is selling their software, and now they have over 1,450 customers worldwide. The other segment is building their own internal portfolio and collaborating with other pharmaceutical companies for clinical programs, which they have approximately 25 programs in process. I personally think both of these segments will be phenomenal for Schrödinger's future growth, since artificial intelligence will become a must for other companies in the drug discovery industry, and the demand to use Schrödinger's software will increase. Also, more exciting to me is that Schrödinger is working on their own pipeline or collaborating with well-known pharmaceutical companies like Sanofi, Takeda, Spark, and etc. using the artificial intelligence platform, which will speed up their process for the FDA approval, meaning they will be bringing the drugs to the market much faster than their competitors, which again means more revenue for the company, since the drug usually brings about 200 million in revenue annually. Also, if you look into their pipelines, they are focusing on cancer and neurology related diseases where the demand will grow as the elder population increases. If you look into their investors, you can see that we have Bill Gates and Melinda Gates Foundation on the top with around 7 million shares. Then we have Vanguard, BlackRock, ARK Invest, and we could also see Morgan Stanley. Also, based on Citron research, they are saying that Schrödinger is the most important IPO in the past 5 years, that they are way ahead in the game of their industry as Tesla was in the electric vehicle sector. At this point, they have a market cap of 4.15 billion, approximately 9 million in debt, but over 600 million in cash. So for me, I am definitely a believer in this company that focuses on drug discovery based on artificial intelligence, and personally think it's a matter of time before the world starts realizing the potential of Schrödinger. So I personally have shares of Schrödinger, but if the market dips or if there's a major crash, I will happily add more shares of the stock.
If you're into low risk, reliable stocks with stable returns, I would recommend you Berkshire Hathaway's stock. The stock is priced rather steeply since it's never undergone a stock split. So if you're interested, it'd be handy if your broker offers you the possibility to buy fractional shares, or you could just buy one of their Class B shares, which are much more affordable. The company's ticker is BRK, and then you add point A or point B depending on whether you want Class A or Class B shares. So on the company, its owner and CEO is legendary investor Warren Buffett. It's a holding company which holds many companies you may be familiar with. They have had consistent and growing total revenues over the last 10 years. Earnings more than doubled in the last 12 months, and the overall goal of the company is just to get consistent ROIs for their shareholders.